In this video, we're going to talk about Aterian, trading under the ticker symbol ATER. We're going to cover the price action over the past few days, the company itself, and the recommendations regarding buying, holding, or selling the shares. If you would like to see more stock analysis videos, please like, comment, and subscribe to my channel. But before today's video begins, I'd just like to clarify a few things about the timing when my videos are recorded, uploaded, and how much they react to the latest market updates. Those are prepared, recorded on the day before, and scheduled for the next day. If there are significant and volatile movements during the trading day, they will not be reflected in the video itself. With that being said, to the extent possible, my analysis will be based on the medium term, or even the long term, and not necessarily on the intraday movements. The main reason why it shouldn't matter that much is because most people investing in stocks, or even just trading in and out of their positions, usually keep their positions open for at least a few weeks. With that being said, if there are significant movements in the stock price that happens afterwards, either they will not affect the overall picture, so in that case we will cover them the next time we're supposed to cover them, or if they are significant enough that they change the outlooks, then yes, I will do a follow-up video in the shortest delay possible with a reevaluation of what I think should happen next. Aterian is a consumer products company. It has its brand of home and kitchen appliances, beauty products, and consumer electronics. Recently, the company has been the center of a lot of attention and speculations between those who want to short sell the company and those who want to short squeeze the short sellers. The reason behind the current dynamic is because on one hand, the short sellers want to push the stock price lower because the company is incurring operational losses. They can do this by borrowing shares, sell the shares at market rate, and recover them later on, and to make money with the difference of prices during this period of time. Now, of course, this is only hypothetical, right? And we're going to talk about it later in today's video, that this is maybe not what's necessarily going on. And the company itself is also investigating on the phenomenon. The market cap of Aterian is currently at $218.9 million, and the enterprise value is at $377.8 million. The market cap is the price tag financial markets is willing to evaluate the company's stock at, with the consideration of its future potentials and the short-term fundamentals. The enterprise value of the company is the net result of the company's assets once all the debts are paid back. Usually the market cap is higher than the enterprise value, but sometimes there may be exceptions because the market may be worried about highly leveraged companies, or there may be operations going on like short sellings and so on. The quick ratio of Aterian is 0.89. The current ratio of Aterian is 1.97, and the debt over equity is 0.16. So Aterian is fairly liquid and doesn't have a lot of debt, which is good news for the shareholders. The Aterian average trading volume has been 4.06 million shares over the past 10 days, and the daily volumes were recently 3.4 million shares, 2.6 million shares, and 3.8 million shares. So fairly constant, but slightly below the average. So maybe the momentum isn't enough to push the stock higher as well. The 1-year beta of Aterian is currently 2.73. Its 52-week high is $48.99, and its 52-week low is $3.04. Now, let's also talk about the options market for Aterian. In terms of volume and open interest, the options market seems to favor the calls options, but with significant put options demand as well. Generally speaking, put options mean that the market expects a pullback, and the calls options mean that the market expects the prices to move up. The key strike prices where there seems to be the most interest at are $4.50, $5.50, and $9. So recently, Aterian has been having a difficult period under a huge selling pressure from institutional short sellers. There are currently around 50%, if not more, of the daily volume conducted in the form of dark pools, mostly short selling the company. Ever since the stock peaked in April 2021, the selling pressure has always been there, and there doesn't always seem to be a true reason to justify the stock performance from a fundamental perspective. The retail traders have now reached a consensus regarding the fact that institutional short sellers are behind this downward slope, and over the past few months, there have been concerns brought up on how come there are so many shares that can be seemingly used to short Aterian. And the company itself has decided to investigate on what is going on, and this is still an ongoing process. And so far, the speculations suggest that the short sellers were able to use loopholes in the market to bolster their positions without having to assume the risk to eventually recover them. So far, this is an opinion, not like a fact set in stone, of some retail traders, and it may or may not be true. But the thing is probably accurate, at least to some degree in my opinion. And this would be because institutional traders may be looking to push out the retail traders. Now, usually my recommendation is pretty clear-cut, but this time it's a little bit different. I believe that we are close to the book value, which is often the minimum the stock price is supposed to reflect, unless the company is having enormous difficulties, which is not the case at the moment. I think that we are now in a zone where a massive rebound is logically possible, even if there is still around $1 of space between the current price and its book value. Therefore, my recommendation on one hand is to keep your position and don't start selling now, while we don't know what is going to happen in the short-term future. I said that it's difficult because at the same time, I understand the temptation and sometimes the need or the urgency of many of you to unload the position because the portfolio in its entirety may be losing a lot of money right now, or you may even having margin calls. So I would recommend you to maybe consider diversifying some of your risks by either putting more capital to invest elsewhere, not in Aterian in this case, or to just grow a thicker skin. By the way, I understand the difficulties of an exposed portfolio. It can be very difficult and challenging on a daily basis to concentrate on anything else other than Aterian stock chart. So hopefully, let this be a lesson for future trading to control your exposure better, no matter how compelling a stock may be. My recommendation is to keep your position if you have an existing exposure in Aterian, and wait for the possible catalysts in this region, and to consider buying around 0.5% of your portfolio in Aterian if you still have room. Your investment should also take into consideration the market conditions at the time, and the surrounding sentiment that determine what kind of asset should be picked, for how much and for how long, and when you should be selling it. First of all, the financial market doesn't reflect the real economy. That much is a fact. If the stock market is doing great, it doesn't mean that the underlying company is necessarily hiring more people, increasing the wages, and rising the living standards of its employees. Sometimes it's even the exact opposite, because the stock market is a big pool where money comes in and out, goes to different places in order to be placed. The capital may be used to be invested in a company to improve its efficiency and productivity, but it can also be used to buy up shares and assets in order to make a profit. This phenomenon is called financialization, and it means that the more money is been used for non-productive purposes like mergers and acquisitions, paying dividends to shareholders, buying back equity, and so on, the less there is for the productive parts. Another way to put it is that ever since 2008, the Dow Jones Index has increased its value significantly. But people don't necessarily see this growth in the main streets. This is why we should be careful with the assumptions of what rising prices mean for a company. Sometimes it doesn't mean anything, other than the fact that the asset is getting more expensive and that their yields is going down. Additionally, some new phenomenons are now palpable, and they are the creation of new bubbles, the participation and influence of retail traders in specific situations, and the anticipation of a massive recession or at least pullbacks. Bubbles have always been created over and over during the past few centuries, ever since there are financial markets. But nowadays, it's quite interesting to see that the speed at which they are created, attract people or capital, and then go bust is getting faster and faster. So almost immediately after the major collapse of the market prices back in early 2020, the same market decided to create a massive bubble of the electric vehicle sector or anything that is related to it. So almost immediately after the major collapse of the financial market back in 2020, the market then decided to, one, recover any sort of price that fell during the first 3 months of the year, and then attract a massive amount of capital into the EV sector or anything that's related to it. Stock prices across the board, but in the growth stocks in particular, went up to the sky for a moment. And even if it didn't last long, this episode definitely allowed market participants, or many of them, to park in their money in a sector and left with either a lot of profits or at least avoiding incurring large losses because they left their money in blue chips or the sectors that are heavily affected. The involvement of retail traders in companies has also been much more pronounced in recent months. Because in the scenarios of a short squeeze, companies may have short sellers who believe that the stock will decrease in value. The short squeeze consists of buying the stock price up to force the short sellers to recover their positions, which will then trigger even bigger increase in stock price. But I'm not saying that this is always rational. And I'm not even saying that companies will always have a very convincing narrative or good fundamentals. Sometimes there's none of that. A good example is with GameStop. If you play video games, ask yourself if you would really always buy your games at GameStop, knowing that you would be buying those games online as well, or knowing that at least you have the capacity, the right to buy those games online in the comfort of your home. But nevertheless, retail traders do have a much more significant influence in the stock price, for the better or worse. Personally, I think that as long as the volatility is high, it'll create opportunities. The final phenomenon is the anticipation of a recession. Many people are expecting something of that sort to happen ever since 2008. There were quite a few companies that were supposed to go bankrupt because of the debt structure no longer sustainable or that their business model is just bad. But somehow that system was able to hold its ground, especially in the North American market. This is partially because the capital around the world chooses to come to American capital market when things get heated back home. This is especially the case when geopolitical tensions increase around the world. In order to make sure that the capital can provide steady returns without being affected too much by central bank policies and inflations, this phenomenon will intensify over time. The bottom line in all this is that the environment is getting more uncertain and volatile in a context where asset yields will probably remain low because the real economy cannot just improve because the asset prices go up. As far as we're concerned, that means that the patience of market participants over the next couple of years will be a great virtue, and that there will be plenty of opportunities to eye for better prices. With that being said, always make sure to keep your positions diversified and your risk level under check. Your speculative positions should play a relatively modest part of your overall portfolio, so thanks for watching. If you like my content, please like, comment, and subscribe to my channel.